All right, so I'm going to actually walk you through one of our trades that we did send as an alert. So from our examples, we knew that Facebook had a very strong 245 support level and a very strong 280 resistance level. So that gave us this tradable zone. In December, and remember this is all COVID too, December we had a lot of those antitrust lawsuits. So think Amazon, Google, Facebook primarily were all in the spotlight, going to FTC meetings, are they going to be split up? That had driven the price down from about $300, which it was breaking out at, and almost down to this 245 level. So around January 12th, we actually got a new judge appointed to Facebook's case. At that point, we're thinking, well, there's not going to be a whole lot of new headlines coming out because the new judge has to kind of pull all the data together, take a look at it. They're not really going to be able to say much one way or the other. So most of that headlines we think is still out of the way, but it's also kind of looming. We also know that there's an earnings report coming at the end of the month. So what are we going to do? We're going to play this forward in time. So it's starting to bounce, and we want to enter long, but it's not quite clear yet. If you know patterns, then this actually is what we would call a bull bear flag pattern. So we want to make sure that that's out of our way. It's showing up like a little support, but it's not quite early. We want to enter when we see the breakout. So what happens? We actually get this kind of push down, last push down, and it bounces perfectly off this 245 support. So at this point, we're taking a look at the chain, options chain, and what do we see? We actually see a nice little debit spread that we can open pretty cheap. At this point, we know that there's an earnings report coming, and we know that we had this couple days of kind of sideways movement, which would bring volatility down on the option prices. But as we get closer to that specific event, we also know that the options are going to start pricing in some additional volatility, which means that if we open it early enough, as we approach the event, the prices will start to get more expensive just because that's how options work. Once there's volatility, if it's low, they're going to be cheap. As we get to specific catalysts, then they actually get significantly more expensive. So do we want to open this right here? No, we actually don't. We want to make sure it can hold this bounce. Since we know that these levels, the support and resistance levels, they kind of act like magnets. You can see it, retesting, bounce up, come back down. This looked like it was trying to break out, but it had this, fundamental issue looming. Ended up breaking down, and now we're bouncing off the support. With earnings coming up, here's the logic. We know that during COVID, social traffic is up literally 4x what it was the year before. I think Twitter was reporting about the same time, but we took a look at this and said, hey, look, we would rather Facebook over Twitter. Facebook is the absolute king of monetizing traffic. We think that with the new judge coming in, there's not going to be a lot of headlines, and people are going to quickly forget about all this antitrust lawsuit, and they're not going to want to miss what could be an epic earnings report with such high traffic rates over the last, call it, year. So we take a look at the chain. We find this very cheap debit spread. We can actually open for about $100. It's $15 wide, so we actually know it's a maximum profit of $1,500. That's a huge reward for very little risk. So we take the trade. We don't take it yet. We're still waiting. And right around here, actually exactly here, where this candle turned green, that is the day that we entered. And we alerted it that day. So we were waiting for all of this to happen. We saw it bounce. We gave it a little bit to hold. This is a bull flag pattern, and there's a couple others, but we'll go over the patterns in another video. But this was our green light to enter. We have multiple factors on our sides, and specifically this earnings report. We know that every day that gets closer to that earnings report, volatility is going to increase the option prices. So we know that they're going to get inflated as we come into that report. We want to open it now before they're too expensive. And let's see how this played out. Actually, one last thing, sorry. We also had a couple levels. So we entered, we have our exit, big exit here at this 280 level. We want to actually plan a couple other exits. So we saw, I think it was this level here. that we identified. Was that 260? I think there was also a 265 level right around here. Yep, that lines up to these two. We had a 280 exit. And there was a 270 also. Sorry. So our option trades we usually enter as 5 lots. So we enter 5 contracts at once, and we plan at least 4 exits with the 5th as being the runner. So as we're pretty profitable out of the gate. But let's play this forward. So right here, boom, we take profit, first order out. We already had that level in mind before we entered. That's done. So we're gonna keep playing. Oh, we got a huge wick. All right, we've taken another round of profits. So at this point, we actually have all of our principal out of the trade, and we're running on all profit money here. So we'll keep it going. We don't want it to lose money. So at this point, if it were to have pulled down below 260, we would have exited the trade just so that we don't lose any money. But now is when we get into real profit. So it's still going. We've taken another round of profits. And now we're actually getting excited because we're getting really close to our strikes. So we can't really lose money even if everything just kind of tanks. We wouldn't lose money based on what we have left on, which is why we really didn't exit at this point. We just let it ride. We know every day that we're getting closer to this event, prices are actually inflating. So even this little movement down doesn't hurt our trade that much. And that's really because of volatility. Understanding volatility is probably the biggest factor that we took aside from the technicals in this trade. So let it play out a little bit, and sure enough, we got this huge break. We've taken another run of profits, and we really don't have anything left. We have one of 5 contracts still going. At this point, it's all gravy, all icing on the cake from here. So a couple days left to the event. We'll let it ride for a little bit. We actually get a rejection, which doesn't actually hurt our trade that much, again, because of this increasing volatility as we approach the event. But in our minds at this point, if it drops down any lower, we're going to go ahead and close the trade. And it did. So on the day of the event, trade is over, and we're done. So buy the rumor here, selling the news as we get closer. This is how we trade. This trade ended up, we entered for $100, and I think the highest profit target we actually got out of this was about $550. So it's a pretty good little risk reward. If you like trades like this, go ahead and join our group in Discord. We have a lot of them. We post them every day. But I hope this helped, and good luck trading.